Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Sei-wan, Professor of Economics at Ewha Womans University. Professor, good afternoon. Thank you for making time today.
Good afternoon, Devin.
Well, let's start with Wall Street, where stocks bounced back on Tuesday as investors watch earnings while also looking ahead to the inflation numbers due out on Thursday. Oil prices are down a bit, which takes some of the inflationary pressure off. What's the story in the global markets?
U.S. stocks rose Tuesday as investors snapped up shares of companies across industries. The gains were broad-based, with 8 of 11 sectors rising. U.S. markets have been roiled by volatile trading in recent sessions, prompted in part by expectations of higher interest rates. The Fed's expected tightening comes against a backdrop of moderating growth, and investors have been reassessing which companies are best placed to weather the more challenging outlook. Yesterday, Dow Jones Industrial Average added 1.1%. The tech-heavy Nasdaq climbed 1.3%. But the market-wide return of S&P 500 is still down 5.1% in 2022 after big selling off in January. In Europe, Paris and Frankfurt markets edged up around 0.2%, but London market dropped. Asian stock markets all gained today. Nikkei added 1.1%, and Hong Kong's Hang Seng Index gained 1.9%. In mainland China, the Shanghai Composite Index added 0.8% today.
And today, Korean stocks were higher too. Foreign investors were net buyers today. Gains for chipmakers Samsung Electronics and SK Hynix. The opposite for the big fintech names Kakao Bank and Kakao Pay. Tell us about the domestic market.
I would say fears in stocks still go on in domestic market with much more volatility compared to that of last year. But today's domestic market is affected by the rise in U.S. markets yesterday. Oil price drop and improved prospects on global chip market gave additional momentum on domestic market. The benchmark Kospi gained 0.8%, and Kosdaq also gained 1.7% today. Most of large cap stocks traded higher today. The largest cap, Samsung Electronics, advanced by 1.6%. But the second largest cap stock, LG Energy Solution, retreated by 5.7% today. Individual investors net sold stocks about 460 billion won in Kospi market. They also net sold stocks by 63 billion won in Kosdaq market.
As you mentioned, Professor, oil prices, which had been steadily moving towards $100 a barrel, are pulling back a little bit now. That's in part, it seems, because of the talks restarting on the Iran nuclear issue, which could bring more supplies on. But also, at the same time, the U.S. has posted a surprise drop in stockpiles. What's moving oil prices right now, and what's your outlook?
In retrospect, oil price stayed around $30 to $40 per barrel level when coronavirus break out 2 years ago. But these days, international oil price is moving around $90 per barrel level from the beginning of February and hit the 7-year top last Monday. So it became one of the largest pressure to boost up global inflation. But the Dubai oil price, international oil market barometer, decreased down to $89.28 per barrel today, ahead of the resumption of indirect talk between U.S. and Iran, which may revive a nuclear deal that could lead to the removal of sanctions on Iranian oil sales. That ultimately increase global oil supplies. Nevertheless, the ease in oil prices could be temporarily because Saudi Arabia, the largest oil producer, raises its oil prices, and the unexpected shutdowns of U.S. refinery facilities. While optimism over the U.S.-Iran talks spurred some profit-taking in the market, the price weakness will likely to be short-lived as the oil market remains in supply deficit.
Well, now the Korea Economic Research Institute is saying that if oil prices do go above $100 a barrel, as some say they could, that might cut 0.3 of a percentage point off Korea's economic growth and raise inflation by another 1.1 percentage points. Then at $120 a barrel, it's another 0.1% off GDP. What do you make of this report and the impact on growth?
It is true that higher oil price is a good news to some parts of Korean economy, like oil refinery firms and shipbuilding firms. But it is a bad news to Korean economic growth and inflation as a whole. Actually, Korea is one of the largest oil importing countries in the whole world, right after China and Japan. In addition, Korean economy is structurally highly dependent on oil. Korean economy's oil dependency, which is the ratio between oil use and $10,000 GDP, is 5.7 barrel, which is the highest among OECD member countries. According to recently released study by Hyundai Economic Research Institute, when oil price goes up to $100 per barrel, this year's economic growth will be shrank by 0.3%. It also says the $100 per barrel oil price level will further increase the inflation by 1.1% for this year.
Well, finally, Professor, last year we saw home prices soar in Korea, and just in the past few weeks we've seen the first decline in a while, even if just slightly. Among the main reasons for this is widely understood to be the rules on lending that are locking up the market. Where do you see the real estate market going, and what should we be watching?
That is a really tough question because it is extremely difficult to forecast the Korean domestic housing market. But the Bank of Korea expects apartment prices to remain largely unchanged for at least 1 year. In a recent report, the Bank of Korea put the country's housing market price index at 100, meaning they will neither rise nor fall over the coming months. Bank of Korea surveys 2,500 households to gauge the index, and the latest reading is the lowest since May 2020, when it stood at 96. But it surged to 129 in August last year when apartment price soared. Rising interest rate and curbs on household loans are main factors of stabilizing apartment demands for this year. However, in Seoul metropolitan area, there are still strong demands for apartments. It means that domestic apartment markets could be adjusted in totally different ways depending on its location.
Right. Professor, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We do appreciate it.
Thank you very much.